Hey, Bulls and Bears, it's Friday, December 16th, 2022. Thank you for joining me. We've got a lot of economic financial news to get caught up on today, as usual. Now, first, I usually say this type of thing for the end of the video, but I got to mention this because it's very important. I don't want to forget. Be careful down in the comments. There's scammers down there. They're trying to get you to go to other platforms. They say it's me. It's not me. They use my logo. They use my name and stuff. But it's not me. If you ever see a comment down there asking you to go to WhatsApp and stuff like that, to chat and stuff like that, I don't have anything like that. I'm not on WhatsApp. So be careful down there. It's not me. I already got one email saying, oh, I thought I was talking to you on WhatsApp. Whoever you were, thank you. But it wasn't me. Another thing, too, I've got a retraction on a previous story, but we'll talk about that at the end. Let's get into the news today. The economy continues to go deeper into the abyss. And this whole economic boom that looked like a good economy was based on easy money, low interest rates, banks loaning out money that they shouldn't be loaning out, people buying things that they shouldn't be buying, borrowing money they shouldn't be borrowing, a lot of shouldn't be's, right? That's what happens when you do these type of shenanigans where you create all this debt, and the debt and the spending creates jobs, and it makes people think like it makes people feel like everything's great. And I got an email from someone that works at a car dealer. They say, JJ, you say the economy is not doing good. People are going broke. Savings is being drained. But he says he's got more cash buyers than ever at his car dealer. Well, don't forget, the top 20, 30% is still doing very well. And the people at the top are doing better than ever. So it's no surprise you're going to see more cash buyers. Now, some of the smart cash buyers are holding back and not buying things right now. They're not buying houses, even though they can, they have cash. They're not buying cars, even though they can, they have cash. So the smart cash buyers are holding back. But yes, there's still going to be a lot of money out there. There's still a lot of wealthy people. Remember, we have the top 30% doing very well, and the bottom 70%, most of that group, as we just reported in our last report, yesterday, paycheck to paycheck. Even people making six figures or more, 43% of them are living paycheck to paycheck. It doesn't mean that there's not rich people out there. There's still plenty of rich people, and the divide between the rich and the poor is getting wider. And the rich people, as far as paying for stuff with cash, yes, they're buying probably like never before, and you may see more cash buyers now. But on the other side of things, I think you're going to see a lot more people taking out big loans that they shouldn't be taking out. And we see that in the default rates for automobiles. So on the other hand, the non-cash buyers, the people that have to get financed, well, loan defaults are skyrocketing. So we're going to see this come to a head here, not in the not too distant future. But let's talk about what's happening now. Some news today that we need to really focus on. Today, the Dow Jones and all major indexes in the red. Dow Jones down by over 224 points on the recent bad news. Well, here's the thing. The bad news that had the market selling off today and yesterday is definitely not recent. They're talking about the rate hikes into the future, and they're talking about the numbers from November, which were the retail sales numbers, which had been came in lower than expected. It's not bad news because the writing's been on the wall for a long time, and that's what we talk about here every report, on how disconnected the markets are between what's happening on Main Street and reality in Wall Street. Wall Street, the people that are buying these stocks right now, it's not the average investor, I'll tell you that, because most investors, small fry investors, mom and pop investors, what we call retail investors, are struggling. Most people are struggling. So it's the big money pushing the market around. And yes, they do make money by taking money from most retail investors. That's why people that actively trade, the statistic is about 90% of these traders lose money. So when we see the market, we see it's big money doing what they do, and but that doesn't mean the economy is doing good when you see the markets go up. And now markets are finally facing reality that consumers are broke, and who are the companies going to make money off of when consumers go completely broke? Yes, people still have money for now. They're taking on debt for the most part. Still cash buyers out there. You're not going to see an instant collapse, but this is a steady decline into further economic hardships for so many people. Now let's get into some other news. Let's talk about Tesla. Tesla stock took another drop down almost 5%, down to about the $150 range. This stock was nearly $400 back in November 2021, just over a year ago. So from 400 approximately down to about 150. And what's Elon Musk doing? How can he handle all this? Tesla and now social media, Twitter. How can he balance all this? And I think a lot of investors are kind of getting skittish, and he's doing a lot of strange things, like banning news outlets from Twitter when he supposedly said, "Oh, everybody should have a voice." Now he's banning people, so it's very strange what's going on. So I think people are getting sketchy on just anything Musk has involvement in, and I don't know how he's going to balance all this. But maybe there's something else happening that's deeper than I could see here. But it does seem very strange, and the people that were holding on to Tesla stock are also feeling very strange right now and very bad with this plunge. Wow, getting wiped out basically. Central banks around the world have now given markets a clear message. Tighter policy is here to stay. Yes, that's what they're saying, but yes, they're talking the talk, but are they going to walk the walk? Will they just cut rates? Well, a lot of people are saying no, they're going to keep hiking rates because this is the plan to implode the economy on purpose, and that way they can usher in their new currency, the CBDC, the central bank digital currency. It's going to be a whole new level of control, surveillance, and authority coming down from the top. We don't want that. We want free markets. We want real money. We want sound money. We want gold and silver to be re-implemented into the monetary system. We may have to go through a lot of pain and carnage before that happens, especially if they bring in this digital currency, which they're trying to compare to cryptos because cryptos were so popular. But I don't think it's going to fly with the people because we see other countries that have similar types of, I want to use the word restrictions on how people spend their money, and it's doesn't end up well. So we're going to see how this plays out. But I think sound money, hard assets are going to be the go-to at the end of all this craziness. And I think the central bank digital currency is going to lead us faster into a hyperinflationary environment. So right now they're tightening rates to implode the economy, and then they'll use that as the blame for moving on or integrating this next phase of the monetary system. That's the way I see it. Please let me know what you think down in comments. More layoffs. Goldman Sachs planning to cut up to 8% of its employees in January. So here's one company that at least kept their employees on through the holidays, but it's not much sweeter when you get laid off right after the holidays, when you have the holiday bills coming up. A lot of people spend money traveling and, of course, gift buying during the holidays, and what an awful time to get laid off. Many people say that Goldman Sachs has it coming. Goldman Sachs plans on cutting up to 8% of its employees as it girds for a tougher environment next year, according to an insider there. Layoffs will impact every division of the bank. Could be smaller than that, but that's what they're anticipating is 8%. So more layoffs. No surprise there, folks. Now, let's just give you a snapshot of what's happening on Main Street. This is a story out of AP. Working at 76. And it's not someone that went back to work part-time because they were bored. 76 years old. Inflation forces hard choice for older adults. This woman here, imagine she'd never have to go back to work. With an ailing husband and the highest prices she can remember for everything from milk to gasoline, this retired school lunch worker from Ohio now works part-time as a salesperson at the local department store to cover expenses. Quote, the holidays are going to be tough, and it's not just for seniors, she said, unquote. Yes, this is so many people unretiring, and it's still amazing that we see a lot of these help wanted signs, but a lot of them that we see are jobs that I don't think senior citizens want to do. I couldn't imagine being in my 70s working in fast food on your feet all day. But a lot of these people, it's sad that are forced to go back to these types of jobs. And, how can you say the economy is doing good with stories out there like this? And it's not just her, it's millions of people just like it. Let's talk about rising rates now. Mexico, they're doing something that maybe we should do here. Bank of Mexico hikes rates to 10.5%, signals more increases coming. Everywhere you look, every country around the world, people are saddled with debt, and now higher rates coming to pile on top of the debt burden. So where are you going to run to? A lot of people are coming here because they think it's better here than other countries, but other countries are going to be collapsing just as dreadfully here as in the U.S. Shock. Philadelphia Fed admits U.S. jobs were overstated by at least 1.1 million. Yes, we've told you that many times here, how the jobs numbers are fake and they're phony. But now the Fed's Philadelphia Fed came out and admitted this. And this is a report here out of the Hedge. Wall Street Journal. A recent poll, most Americans are pessimistic about the economy. So now the doom and gloom, which AKA I call reality, doom and gloom is reality, as far as the economy goes, is spreading. Most of the population now agrees 2023 is going to be a very bad year for the economy, and it's going to get tougher and rougher for most people. It doesn't mean that there's not still rich people out there. There's still rich people out there. Yes, they're going to come to your car lot. And if you work at a car lot, they're going to be buying cars with cash. Over a third of the voters say inflation is causing major financial strain, but the majority say the economy is headed in the wrong direction, and it's just going to continue, folks. So we have to keep looking out for what's ahead. Strap it in, strap it up, fasten your seatbelts, and get ready for a rough ride down this river. Thanks everybody for watching. Hope you're well. We'll hopefully see you this weekend with another update. Thanks everybody for being here. Really appreciate it. Bye for now. Peace.